So let's go to Evan Lucas. He's standing by at IG in Melbourne. Evan, good morning to you. Thank you so much for joining us. So just tell us what we're expecting from the local market today. Do you think that we can hang on to some of the gains that the futures are pointing to?
Yeah, it certainly looks like that is the case, Nadine. Having a look at what is going to happen this morning, we do look like popping up. It also is quite an interesting space where it's coming from. It's a fairly muted response in the materials space, but you are actually seeing a little bit more upside, probably in the defensive plays like the banks that have had a little bit of a harder week than usual. You also may see a little bit more upside in your Woolies and Wesfarmers as well. It should be a good start to the day. It also will mean that we may end up finishing what has been a shortened week because of the Australia Day holiday, actually basically dead in line. We're only off around about 0.7 for the week. If you have a look over in the US, they're on the same balance. It's been a very, very strong week in terms of moves. We've had 1% moves in either direction on Tuesday, Wednesday, and then also you can throw yesterday in there as well. It's been a very, very hard week to watch and very, very hard week to sort of get your hands on who's actually winning the battle with regards to whether or not the bears believe that the emerging market story is really overtaking the whole market sentiment, or whether or not the bulls think it's a time to actually get in and see the dips that we've seen all the way through January. It's been an interesting January month. It's going to be the worst January since 2010, but back then we had a 6% decline. This month at the moment, and obviously it is the close of the month today, we're only down just shy over 3%. So that should reverse again today, mainly mean we're down around about 2.6, 2.8%, depending on what we see in the moves today. So all in all, it's an interesting trading session. And because it is the close of the month today, remember that there will be a lot of managers out there probably window dressing their books, making sure that they do close the month on the way that their books were expected to see. So you may see sporadic movements. You may see companies moving at a fairly, reasonable lick, even though there's no company news behind that, because there will be a lot of positioning heading into the end of the month. So it's been an interesting month, an interesting week, and today should actually see us finishing the month in the green after some really nice leads over in the US as well.
Yeah, it's looking pretty good in the US, and perhaps even better than that. We're hearing from Google. We were expecting the company to report after the bell. That's what's happened. Shares up 1.3% in extended trading. Revenues for the quarter, $16.8 billion, which is an increase of 17% on the fourth quarter. Just a first reaction to the Google results, and then perhaps following on from that, Evan, give us your rating of the earnings season so far in the US.
Yeah, look, that's a really nice number to hear from Google. Google at the moment look like over the next 2 years ramping up roughly around about sort of 48 to 49% on that revenue line. To see quarter-on-quarter growth at 17% does suggest that their forward guidance is on that track. It means that of the last 6 quarters that they've reported, they are well and truly into double-digit numbers as well on that initial figure you just gave them, Dean. So that is a really good thing to see. Google, if you have a look on a chart, is an absolute beautiful thing to see. It has a very mature uptrend chart. This will certainly do that. A lot of people sometimes question Google. They are expensive. Some, are alluding to the fact that they are roughly trading about 32 times earnings. But I think for the kind of premium that you get out of Google and the kind of return you get is certainly well and truly, valid for that kind of offering as well. So that is a very good thing to see, and it means that you also can put Facebook in there as well. People are going to get really quite excited by next week's news from Twitter. You can already see that as well. Putting in perspective what you've seen from the US earnings season, it's been an interesting one. It's certainly not what you would call a classic US earnings season. The sales revenue line of the 257 companies that are reported so far on the sales line, about 63% of companies have actually surprised on the upside of consensus estimates. Now that is actually historically lower than most people normally see. Normally it's between sort of 65 and 70%, so that is a little bit flat, but the earnings line is well and truly above. It's coming in with those companies that 72% has surprised on the upside. So that is an interesting thing to see, and particularly the fact of where the major strength is, and that is consumer discretionary and consumer goods. And as we alluded to, the GDP figures last night show that consumers' spending is at its highest level since the GFC. So that is probably where you're seeing that numbers, and on a micro level and looking from a bottom-up perspective, that is certainly flowing through in the earnings season. That is good to see. The other place is healthcare, and that is also doing very well. The place that is underperforming, and that's a bit of a concern from an Australian-centric point of view, is materials, and they are well behind and well down. Only 33% have outperformed on the sales line, and only around about 50% of them have done on the EPS line. So that hopefully doesn't spill through to our earnings season, which starts in about a week's time, but it's certainly not a good omen for where we're sitting.
Yeah, especially when we heard from Caterpillar in the US this week, and outside of its construction equipment, things not looking so great for that area either. Also, just want to update our viewers, Amazon, that's another one that we were waiting for coming out of the US after the close, and that obviously also still speaks to that consumer story. Fourth quarter service sales of $4.52 billion. That's versus $3.1 billion a year ago. So, I mean, if we're talking billions of dollars, it certainly seems, at least on face value, to be a pretty good result. Would you say so, Evan?
I would. I think the consensus number I had a look this morning was around about 4.08. So that sounds like a slight beat on the consensus numbers as well. Again, Amazon's another one up there. They have done very, very well over the last 3 quarters particularly. They had a bit of a rough start to the start of last year, despite the fact that seasonality normally governs that the first quarter of the year is a good one for Amazon. So that is a good thing to see that they've seen their December sales do quite well. That will be another thing to watch very closely today in aftermarket.
Yeah, although aftermarket trade down 5.7%. So we'll look into that one a little bit more, Evan. Let's get back to the here and the now. When we're looking at economic data here at home today, we're expecting to get producer price index, and also we're expected to get private sector credit. Not really market moving events, are they?
No, and I think, look, the PPI, so the Purchasing Managers Index, will be interesting to see what we saw from the CPI data last week. So it's another leading indicator of inflation. If we do see, there is a bit more of a jump there, maybe. I think the data that you've really got to work from an Asian-centric point of view that will be effective to the Australian market as well as what's going on in Japan. So today we see a lot of their CPI data coming out. So Tokyo CPI, national CPI, core, and also their national excluding food and energy. And I think that's the one you've got to watch. Obviously, we know what's going through with the Bank of Japan, also with Abenomics at the moment, about them trying to really stimulate their economy out of the deflationary pressures they've had for the last 15, 20 years. And we have seen since May, when that was undertaken, that there's been a slow and steady gradual improvement in those figures. We've seen basically move in the one that the Bank of Japan watches quite closely is the one excluding food and energy. It's gone from about minus 0.4 to just sneaking into the black sort of in November, and it's held above that. It's up around about 0.2, 0.3% at last read. So the December read is expected to come in at 0.6. Now, that would be a good thing to see. Some people will question whether or not they're moving at the pace that they want to be moving at. They've had a 2-year timeline on what they wanted to do, but the market will probably want to see it happening inside 12 months. So if they come slightly below or not growing at the kind of rate that they expect on that inflationary figure, you may see a bit of pressure coming out of Japan. You may see again that yen appreciating, and that will really have a negative effect like we saw yesterday on the Nikkei, and it may unfortunately sort of unwind a little bit on what we see on the green on screen expectations for the ASX as well.
Okay, so we will be watching all of that data quite closely, and most of it looks like comes out at about 10:30 to 11 o'clock local time. Evan, thanks so much. Love talking to you, and we'll chat later in the day.
Thanks, Nadine.
Evan Lucas joining us from IG there.